Hey everybody, this is Jim at SB500chart.com. It is January 4th, 2014. That is a Saturday. It's about 3:30 in the afternoon, and I'm doing the video for our weekly review. First one of the year, by the way, and try to see if we can make a little sense out of what we saw happen over the past week. Before I do that, I just need to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I am just a guy who draws lines on charts. Okay, we're starting out here looking at a 5-minute chart, and let me adjust that just a bit. There we go. And this line right here at 1848 is our target from our last quasi semi inverted head and shoulders pattern that got met. And then we on our first session of the year immediately gave up about, well, from the high of the day, which is, well, let's put it this way, from the closing of 2013, roughly, let's call it 1848, we ended up giving up a little bit more than 1% from the high of the previous day to the low of the next day. That's not a huge move. That's not going to create panic. But it's funny how you can see things that get scaled almost the same way on a 5-minute chart as compared to if we were even looking at a 1-day or a weekly chart. And what I mean is, oftentimes when you get a rapid move in one direction, particularly if it's down, you'll often reverberate just a little bit at about the halfway point, and then you go down more. Okay? If we go back even, I think a 3-day chart will do it. If we go back to when the wheels really came off back in the fall of 2008, you'll see the rapid descent, and then there's the little back and forth, and then there's another bout of selling pressure, and in this case, and yet another one. So, am I saying that we are looking at a similar situation to the fall of 2008? No. But what we are doing is we are looking at some of the same little tendencies that markets make, because even with high-frequency trading, behind every computer there's still a human. And in that human, there's still a motive. And those motives are either going to be a desire for gain or fear of loss. So they build the human quality into the algorithm, I think. I think that makes sense on so many levels, and I think we actually see that happen too. We have a vastly different market, the way it trades mechanically now, than what was in place even in the early 1990s. But I still think we see the same things. So, on a small scale, rapid move down, a little juking and jiving back and forth, and a little consolidation, then another move down. Now, what's interesting, by the way, I mentioned that it looked like we might have a little inverted head and shoulders here, and if we did, I would expect some positive, a positive Friday. We didn't really get it. It started out looking that way, but then I believe the S&P began to show us, no, we're doing something else here. We're not just going to come down and then bounce right back up. We've got a little bit more work to do in this area. So this line's going to get gone. But what I'm going to do is, after I talk about this just a second, I am going to throw a new line up there that's not that far different than the one I just got rid of. Instead, what I think we're seeing here, I believe we're seeing the formation of a symmetrical triangle. And we have actually very clearly defining touches on the top. We can get rid of those two, and we can get rid of that. Look here, we got 1, 2, 3, 4 touches that line up about as precisely as you're going to see. If we do that, they line up almost perfectly. And down here on the bottom, we got something that's close to that. Accurate, not quite, and we've got 3 touches on that. And what appears to be the wind-up for touch number 4 that did not happen because the market closed. So, we are trading between this line and this line for almost the entire start of 2014. Well, what do we know about symmetrical triangles? Well, we know a couple things. We know that that like we saw this little guy form right here, they often will form after a swift downwards move. We know that even though they can go either up or down, they tend to go in the direction of the move that preceded their formation. Now, here's where we got a question, and that is the move that preceded the formation of this symmetrical triangle, this move coming off of the highs of the last day of 2013, or did we come up, get a little ahead of ourselves, and now we are actually coming to a place to where we are consolidating to continue the move up? You see what I'm saying there? Is this a move? Do we call this a formation after a downward move, which would be just coming off of the highs of December 31st? Or if December 31st had never happened, would this be coming up, then consolidating, then going back up again? I think you could make the case sort of either way. And even if you knew which way that you were expecting this to go, based upon the definition of the previous move before this pattern formed, then what would that do for you? Well, that would improve your odds to about 60% that this ends up being a continuation pattern. I'm kind of the opinion that this swift down move right here to start the year is probably the best way to look at the formation of this pattern. So this I would think the odds would favor taking this out to the downside and coming down and finding some support. So the way the week went, since this is supposed to be a weekly video, we ended the week slightly down. We did one very good thing that we were expecting, and that was a move to get up to 1848. Even though we broke this blue channel, it was only to go sideways long enough to create a little breathing room for the S&P to get up to 1848. So that was, I consider that a clear win for the technical chart reader. As far as this pattern that we got right here, that's kind of the thing that's got a little bit of a question to it. We do know this, is that when it does break, we can measure it and we can tell you what the expected move would be. That's pretty easy. We go to the, I'm going to split the difference here. We'll go to right about here and measure that distance. That gives us a move of about 13 points. That's not huge. That's really pretty small. Matter of fact, it's probably more like 12 points. So if we were to break up out of this pattern, let's say at some point fairly soon on the 6th, then we would be looking at this pattern setting up a retest of the 1847, 1848 high area. And if we break down to the downside, let's say it happens right away, because we are headed there. So I sort of doubt that we would come up to this level, then down again. I think if we break, we probably break right off the bat. But honestly, that's just a guess. And if we were to do that, then we would be looking at a minimum target from this pattern of 1820. So that's 11 points lower. The way the market has been moving lately in this inexorable climb, it's not easy to get excited about getting to 1848 again, and it's not particularly scary thinking about 1820. Because here we are at 1830. Fact of the matter is, go back 2 years ago, who thought we would be at 18 anything? Honestly, I thought we would probably top out under 1600. I was wrong. But when we got over that, then we had to reevaluate. So guys, that's kind of the deal. I don't see any long-term line that we can bring into this chart that gives us any what's the word I'm looking for? That gives us any reason to expect a bounce right where we are. It doesn't mean it can't happen, but there's nothing there that says expect a bounce where we are. Because our larger pattern, that strange inverted head and shoulders pattern with almost no right shoulder, it's done its thing. We can't count on that for any more, other than the pretty strong possibility that this extended neckline will offer some support if we get down there to test it. So guys, I guess we could throw up a line off the lows back here and here, just in case. But again, like I said, I believe we would encounter this neckline at any point during the week prior to running into this support line right here. But hey, let's leave that on the chart. And guys, New Year's resolution, I'm going to clean up my chart. Please let me know if this just gets too cluttered for you. I've had a few people kind of mention that. I don't think they're members of the site, but a couple people on YouTube would send me a message and go, "Man, I just can't make heads or tails out of what you're doing." And I usually tell them, well, if you stick with it and you follow it, most things that we talk about, I just leave them on the chart because often they do have some influence down the road. So it's hard for me to get rid of too much. But for right now, let's keep an eye on this triangle coming into the week of the 6th. See what we get with that. And by the way, I wanted to let you know, Tuesday's video will be very late. It may even be early Wednesday morning. I'm flying back from the West Coast, and I don't get in till late on Tuesday. And with the time lag and everything, I may not be able to get that done. So guys, there you have it. Let's see what happens. Let's see if this guy breaks up and we get back up to 1848, or if it breaks down and we start getting down into the 1820s. We'll know soon. I want to thank you for your support throughout 2013, and thank you for starting off with me in 2014. Let's see. This could get interesting this year. I say that every year, and every year it is interesting. But this, I think 2014, I just get this feeling we're going to have some potential twists and turns. Let's see if that ends up being the case. Thanks. Take care.